morning. This is Pete Najarian. It's the take on a Monday morning, kicking off a big week in front of us. Obviously, earnings season. We've been going through the earnings steadily, and now we're kicking in even more. We got IBM later on this evening. That should be pretty fun, but we've got a lot to talk about in terms of the lead into Friday. We had the Gilead news, all the excitement about that, and because of that, and let's not forget, there was some news also about Boeing going into Friday's open, where Boeing was talking about opening up for Monday, and Gilead with some very, very positive news. Now, is it the perfect solution? Absolutely not. Not that we know of yet, but there was a glimmer of light as we talked about. And because of that, the market started the day really starting to move to the upside in a big way. And that was impressive. We got back up and over 24,000. We basically held on near those levels for the majority of the day, but the negatives of the day were oil. It's in the 17s. It was down about 11% or so today. Take a look at WTI. My goodness, down 40%. It was trading underneath $11. These are incredible numbers, guys. Now, let's not forget the expiration cycle, May going away, all the rest of that. And so the forward pricing, all that kind of a thing. So we all understand that. But the reality is still the prices per barrel, if even you go out a little bit further, they are coming down, and they're coming down in a big way. And that certainly is affecting Exxon, Chevron, all the beta names, of course, are getting affected by that. So energy really under some serious pressure. I got to tell you about volume for just a second, because we talk about this all the time. And the volumes on Friday, we said how we had gone through a period of time where we were seeing extremely low volume. Well, that was, in the relative terms to since the coronavirus, lower volume. So that was something that did stand out. But we also have talked about a day here and a day there where we've watched some of these volumes spike. Friday was one of those days. Friday, we watched the volumes absolutely scorch to the upside on an up day and finished over 30 million contracts. 30.5 million contracts were trading. That's 2 million over the year-to-date average. That's 4 million over what is presently the April average. So, yeah, we've got some serious volumes, and the volumes have been coming back. I would think just based upon the first hour, we're about almost, not quite, about an hour and a half into Monday trade. Based on what I'm already seeing, I would say we're on track to be a very, very high volume day once again, at least over the April average for sure, and maybe even approaching some of that year-to-date average. Somewhere in that world, it seems like. I don't know that we'd hit 30 million today, but maybe we will. Certainly, we're starting off very, very high in terms of volume. Big torque. Our unusual option activity is already filling up. It's absolutely been an amazing first less than 90 minutes of the day. Now, go back to Friday, you finished over 24,000, which was monumental. And that was something, because when you look at this recovery and the speed of this recovery off of the absolute lows, been a big but very, very rapid. Now, once again, I'm going to bring it up. Yes, there's no doubt when you look at the final hour of trade, we talk about robo, we talk about all these different types of algorithmic trades and everything else. Absolutely. That was definitely a part of it, because the shift and the velocity of that move in the last hour of the day from, call it 250 to 350, we really accelerated, and suddenly we were running to the upside, and that's why we closed just off those highs of the day. So that was pretty impressive, I thought. Today, however, coming into today, that oil news and a combination of so many different things, but I think oil being the overwhelming influencer of the market, we were down over 500 points. And that was all in the pre-market. That continued into the regular market. We're down now as it's been moving around, and it's been moving very rapidly. The S&P down about 1.5%. You look over the Dow, it was down about 2%. The NASDAQ down about 0.75%. Well, we have really recovered just in the last 15 minutes or so. I'm watching the markets that were down about 350, then about 300. Now we're down about 250 points. I'm looking at a VIX that was trading somewhere closer to 42. Now we're trading a lot closer to 40 after finishing out last week around 38. So we had strong volumes. We've watched the VIX trade, interestingly, on days that are down days and up days, but watching the VIX actually come in fairly rapidly. So as we talked about, are we starting to find a little bit of a range? And Scott Wapner just last week was asking me, what am I looking for in terms of the volatility index? And I basically looked somewhere towards the lower 30s. That's when you start to get even more comfortable. I think we're getting comfortable now, but I think you get a lot more comfortable if you get to that 32 and less, and then we start moving into the 20s. Then that's going to be a big major statement, I think, in terms of sentiment in the market. And that sentiment, we know how far that can go. That can be a very big part of it. So early on, airlines smacked. Energy whacked. The combination of both of those moving to the downside. I'm showing UAL right now. It was down about 6%. American was down about 4%. Delta trading a little bit better, but still down close to 3%. So the airlines definitely were under pressure. They've come back a little bit, specifically off of those lows. There's no doubt about it. But I talked about a lot of different things in terms of the volume, in terms of volatility, in terms of all of the improvements in the marketplace and how fast things have been working. So I got to tell you something. It's really interesting as I'm going through the unusual option activity for today and looking at all of the different hits that we are getting. And it really is amazing. And we are getting so many. I'm going to be talking about a couple of those unusual option activities when I get on the CNBC halftime report, which you'll see me on there. That's why I'm a little bit better dressed today than normal. I got the collared shirt and the button down. Hey, man, I'm still Pete Najarian at the take. Let's be honest. Market Rebellion, baby. But I was struggling with what I wanted to really highlight for everybody in terms of today's unusual activity. So thanks, Corey. Thanks to all the guys at the Minnesotan. The XLF is where I decided to go to because last Friday I talked about some of the leadership and where are we seeing some leadership. It was only a day. Let's not forget that. I wasn't trying to make it any more than it was, but to see something other than the top 8 or 10 NASDAQ stocks driving the markets is a statement. And last week we finally saw. We had the financials up about 5%, as I said on Friday, really showing some of that leadership to the upside. Now they've been hammered, but they recovered some of that. And that's kind of what you're looking for, right? Especially as you've gone through a week where we've gotten all the earnings and we watched the financials getting beat to the downside after the earnings. We're talking about JP Morgan. It was over 100 and it got underneath 90 after the earnings just last week. In that time frame last week, that's where JP Morgan was trading. Well, today I'm looking at the XLF and I say, you know what? I think that's the one I would like to highlight for everybody here at the take. 50,000 calls in one single trade hitting all at once. 50,000 May 25 calls were bought in one print. Now the XLF was trading around 22.10. That's going to take quite a move to get up towards there, but it doesn't need to do that. But if it can accelerate and continue to move higher as we get closer and closer to May. Now let's remember, there's plenty of weeks. You've got about 4.5, 5 weeks still before you get to that May expiration cycle. So if we start to move faster now towards those numbers, that will help those options start to work to the upside. They all were bought very inexpensively. It was a 26-cent option. So risk reward, I like when I see these kind of trades. Does it mean it's absolutely going to work? Absolutely not. There's no way that I would say that. But when we see a trade like this and you've got a little bit of time, you got 5 or 6 weeks, this isn't expiring on the 24th, this isn't May 1st, we're going all the way through May, you get the May expiration cycle, that really stands out. It says somebody looking for the financials to maybe start to show a little better recovery even than they did towards the end of last week. So that's pretty interesting. Guys, I'm Pete Najarian. Educate yourself. You have to understand the world of options as much as possible. It is the growth engine of the markets. This is where the growth is, the derivatives market. So understand what these options are. You understand what the Greeks are. You understand, if you can get educated, to understand what the risk rewards are, because those are all extremely important. Understanding what it means to buy a call, sell a call, buy a put, sell a put, all of those types of things, spreading things off, how you can do that. Those are all very important aspects of the marketplace. We use all of these each and every day. There's no doubt about it. They all, if you find the right one, it doesn't mean you're going to make money, but at least puts you in a position to have the best opportunity to have some success. Again, I'm Pete Najarian. This is the Market Rebellion.